Good evening. Good evening. I was supposed to hold this class yesterday, but we didn't hold the class yesterday. Right, so we'll do the class today. All right. So uh, today we're going to be talking about supply and we're going to be talking about demand zones, right? Supply and demand zones. Right. We're going to be talking about what is the supply zone and what is the demand zone. Right. So let's do a quick review of what we have done during the past few days, right? So let's do a quick review. Right, so let me share my screen. All right, so we spoke about structure. We spoke about structure. There are three types of markets. We have the uptrend, we have the downtrend, we have the sideways market. Now, the uh, what makes a structure valid? For example, what makes an uptrend valid? We know that there are two components that makes an uptrend. We have the higher highs, which we actually explained. We have the higher highs, and we have the higher lows. So we have the higher highs. This is the one high, the one high. Then we have the higher low, right? So the higher low. This is the two. Excuse me. This is the two components that actually makes an uptrend, right? So basically what actually makes an uptrend valid? What makes an uptrend valid is only when the higher highs are being broken, right? Only when the higher highs are being broken. Now we can actually see that price has been moving up and moved with an impulse move with a correction phase, right? But until this high, until the high, the peak that it created is broken, the uptrend, the there will not be a continuation of an uptrend, right? So we want to see this high is being broken. Until this high are being broken, then the uptrend will not be valid, right? The same thing goes with the downtrend, right? So the same thing goes with the downtrend. We know that the downtrend comprises of a series of lower lows, right? So lower highs and lower lows. We have the lower high, this is the fresh low high, this is the fresh lower high, this is the fresh lower high. Then we have the lower low. This is the pardon my drawing. And this is the first second lower low, right? So we can actually see that what actually makes an uptrend valid, right? So what makes an uptrend valid is when sorry, what makes a downtrend valid, sorry about that. What makes a downtrend valid is when the lows have been broken, the lower lows have been broken, right? So until the lower lows are being taken out, until they are being taken out, we do not see the trend going back to the downside. We do not see the trend going back to the downside. So basically, we also talked about the trend switch, right? When when an uptrend becomes a downtrend, and when a downtrend becomes an uptrend, right? And we can actually see that price has been moving. Let's explain when an uptrend switches to a downtrend. Right? So we can see that price has been moving up, right, creating a series of higher highs and higher lows, right, creating a series of higher highs, sorry, creating a series of higher highs and higher lows, right. This is a higher high and higher low. But you can see that when price came back here, price began to stall, price began to stall, began to stall, price began to stall, began to stall. This is the major high. This is the major high. These are the major highs, right? These are the major highs. Price began to stall. The price began to low, right? Remember that price has created the low. Now this is the low that price has created. Price has created this low. Now price takes out this low instead of taking out the high. This is what we call a trend change, right? When price takes out the last low that was created before the last high. This is the last low that was created before the last higher high. So price broke the low, right? Price broke this low. Price broke the low, which signifies a trend reversal, came back into it, then it started creating a series of lower lows, right? Started creating a series of lower lows, right? So this is what we call a buy side changing to a sell side. Excuse me. I'm sorry about that. Just having a cough, just having a little bit of cold, right? So, but let's get into it. Now we can actually see that the buy side have changed to a sell side. Why? Because the last low has been taken out, right? The last low that formed the last high has been taken out, right? You can actually see that this is basically the structure of a trend reversal, right? Now let's explain what the buy, the sell side. We also talked about, sorry, we also talked about the sell side changing to the buy side. Now, the same thing goes with the sell side. Sorry. The same thing goes with the sell side. We can actually see that price started creating a series of lower lows, creating a series of lower lows, right? Creating a series of lower lows, and price created uh, uh, the last low. This is the last low. Then price started uh, dancing around this region, right? Price started dancing around this region, right? But price did not break out this low, but instead price broke out the last lower high. So the last lower high, right? So price broke out the last lower high that formed the last lower low, right? So the last lower high that formed the last lower low. Price takes them out, made a correction move, made a correction move out, made a correction move after making this impulse move, made a correction move, then started reversing. So we can actually see that they started creating a series of higher highs now, higher highs, and higher lows. We can actually now see that the trend has changed from the sell side to the buy side, from the sell side to the buy side. So basically, this is what we have taught for the past week. Now, today we are going to be talking about supply and demand, right? Layman example of what a demand is where the orders are filled in the buy side, right? So the layman example, layman definition is when you talk about demand, you're talking about buying. When you're talking about supply, you're talking about selling. Now, when you are when you want to explain it, so that when you want to explain it in a way that when you want to elaborate the explanation, right? So you can actually say a supply zone is actually a zone where we have so much sellers in the market, right? So a supply zone is where we have so much sellers in the market, while a demand zone is where we have so much buyers in the market, right? So now, before you can understand supply and demand, before you can understand supply or demand, right? So you need to first of all understand structure, right? So the first thing you need to understand is structure, like we've explained higher highs and higher lows, right? So we can actually see that price started creating a demand zone. Price started creating a series of lower lows, right? A series of lower lows, right? So this is basically structure that we've actually taught in our classes, right? So this is basically structure, right? So all you want to see in a demand zone or you want to see in a supply zone. Now, what actually makes a supply zone valid? The first thing you want to consider is structure. You want to consider the structure of the market. Supply has to do with the downtrend. A demand has to do with the uptrend, right? So supply has to do with the downtrend. A demand has to do with an uptrend, right? So in a supply zone, the formation of a supply zone, you want to see strong upward move and strong downward movement. And I'm going to draw an example here. Please pardon my drawing. The formation, I'm going to draw the formation of a supply zone, right? Now, this is the first one. All we want to see is we want to see strong move to the upside, right? Strong move to the downside first. Now, we can actually see that price started coming back down. Price started coming back down, right? These are the big candles, right? These are the candles. Then we can actually see, we can now see that price change, like the movement of the candles change to the upside, right? We can actually now see big candles changing to the upside. Now, this fall right here is a bullish candle. They are bullish candles, right? It can be bullish, can be bearish, can be bullish actually, but sorry, bearish rather, bearish, right? So, what actually makes a demand zone, what actually makes a demand zone to be valid is that you want to see strong fall and strong rise, right? You want to see strong momentum to the downside and strong momentum to the upside. The demand or the candle that makes a demand zone is the last bullish candle before the rise. Sorry, the last bearish candle rather before the rise is what makes a demand zone valid. This region right here becomes a demand zone, right? The first thing you want to see is strong momentum to the downside, then strong reversal momentum to the upside, right? Now you want to consider the last bearish candle before the last bearish candle before the rise. The last bearish candle before the rise, right? That's like in between the strong move to the downside and the strong move to the upside is what is we not, is what we use as a demand is what we use as a demand candle, or what people call an order block, right? So, or what they call an order block. So let's look at an example. I think we have a typical example here. Let's sorry. We have an example here. We have an example. I'm sorry, if we just hold on a minute. Right. So, uh, I think we have an example on Crash 500, right? So this is basically Crash 500 chart, right? This is Crash 500 chart. Now I'm going to zoom in very well so that you will see what I am talking about, right? Now we're going to use this particular region as an example, right? This particular region as an example. You can see that price actually moved from this region, right? So I'm going to explain why price moved from this region, right? I actually took this trade. Oh, sorry, I'm actually still in this trade. I'm actually still in this trade because we saw that price was in a down, was when a price came back into a demand zone, then moved back up. But the first thing you want to understand, like I actually said, is that you want to understand structure. What is the structure of this market? Now you can see that this market is actually in an uptrend. Why? You can see that price has been creating a series of higher highs and higher lows, right? So this is the first thing you want to understand. You want to know the direction of the market. The directional bias is extremely important, right? After you know the directional bias, right? Now you want to, since you've known the direction of the overall trend, now you want to plot out where do you think the market will turn? Where do you think it will turn? Since we know it's in an uptrend, we are looking for the corresponding demand zone. Where is it going to turn? Which demand is it going to respect, right? So the first thing you want to see is the the first move. You can actually see that price formed a very good demand zone. But before we get into this region, you want to see how price moved, right? You want to see that price made this low. Price made this low, right? Price made this low. Price made the low. Then price made this particular high here. Price made this particular high. What actually made this particular region to be valid is when this high is broken, right? Until this high is broken, right? So until this particular high, until this high is broken, this demand zone will not be valid, right? This demand zone will not be valid. Like I said, the first time what you actually want to consider first is structure. You want to consider structure in the market, right? So I'm actually, I think I skipped a particular explanation, but I'm going to explain it, right? So you want to actually, first of all, look at structure in the market, right? So the first leg, the leg that formed the move, the leg that this huge leg that formed this huge rise is where the demand zone will be situated downwards, right? So downwards around this region, right? Around this region, around this region. Now you can see that we see a strong fall. This is a strong fall, right? So this is a strong fall. This is the base and the strong rise. Now you can see that this region right here is a complete demand zone. Why is it a demand zone? Now, why it is valid? Why is it a demand zone? First, let's explain why is it a demand zone. It is a demand zone because we see a strong drop, a base, and a rally. Right? Because we see a strong drop, a base, and a rally. A strong drop, a base, the last bearish candle before the rise, right? This is the last bearish candle, right? This is the last bearish candle before the rise, right? So this is a demand zone. This is a demand zone, right? Let's see if um this is a valid demand zone, right? So this is a valid demand zone, right? So um let's go to the supply zone, right? So we're gonna talk about let's talk about this demand zone. Why is the demand zone valid? Let's go to our board. Now, since we have established the fact that sorry, now since we have established the fact that we want to see a strong drop, a base, and a strong rise, right, in a demand zone. Now we want to know the validity of a demand zone, right? We want to know the validity of a demand zone. We don't, it's not enough to know a demand zone. You want to know whether the demand will hold. Now, we see that price has been moving higher, making a series of higher highs, right? So, right, higher highs and higher lows, right? So, let's use this. You can see that price has been making a series of higher highs and higher lows, right? So, this, right? Now, this we can see that this is an uptrend, right? This is an uptrend. The first thing you want to know is structure, like I told you. Structure is the first thing you want to know about, you need to understand when it comes to demand and supply. Now, price created this strong rise, this rise and this drop. This is where price created, right? This is what price created. Now, price came back, dropped at this particular region, right? Until this high is broken, this demand zone, right? Because where the valid demand zone always happens is where this rise takes place, right? The last bearish candle where this big rise takes place is where the valid demand zone is. Now, until this high is being broken, until this high is being broken, this zone right here around this region will not be valid. This zone around this region will not be valid. This zone around this region will not be valid, right? So the next zone you want to be looking at is this zone, right? You want to be looking at this particular zone right here. Now, the only thing that will make this demand zone, why is it demand zone? Because you see a sharp drop, a base, and a rally. Until this high is being broken, I will not consider this region as a good demand zone, right? Until this high, once this high is broken, then I will consider this region as a demand zone. Now, why would I consider it as a demand zone? Because price made a sharp drop, it formed a base and a sharp rally, right? A sharp drop formed a base and a sharp rally. Secondly, I want to see structure. Once those two pointers are being met, then I will consider this region as a demand region. This is the possible region where I will see a turn in the market, the market. A typical example is the C500 trade that we actually use to make the explanation, right? So let's go into the supply zone. The same thing that happens here is what happens for a supply zone, right? Right. So what actually makes a supply zone, right? You want to see what makes a supply zone. You want to see a sharp rise. You want to see a sharp rise. This is what you want to see. A sharp rise, then it formed a base, then you want to see a sharp drop, right? You want to see a sharp drop, right? So the last bearish candle before the drop, the last bearish candle before this particular drop is what we will consider as a supply region. Why is it a supply region? You want to see a sharp rise, it formed a base and a sharp drop, a sharp rise and a sharp drop, a sharp rise and a big momentum candles, big ones, and a big momentum drop, big momentum candles rise and a big momentum candle drop. So these are the criteria that you actually want to see for a good supply zone, right? For a good supply zone, right? So let's go to the chart. Let's see if we can see something on the chart. Um, let's see if we can see something on the chart. Um, I don't know if see an example here. We should see an example here. Um, a very valid, right? So now we're going to use this particular region as an example, right? We're going to use this particular region as an example, right, for the demand, for the supply zone. Now you can see this rise, right? You can see the rise. Price moved sharply from this region, formed a base. Now the base is the last bullish candle, the last bullish candle before the drop. Like I said, the last bullish candle, which is here before the drop, right? So the last bullish candle before the drop, you can see that price came into with the last bullish candle before the drop. Now you can see that price came into the region. Price came into the region and formed and went lower, right? Price came into the region and went lower. Now, this particular region is what we call a supply region. This particular region is what we call a supply region, right? You can see that price went back, sharp rally, a base, and a sharp drop. Sharp rally, a base, and a sharp drop. All we want to see on a supply zone, you want to see these huge big candles, right? These huge big candles, then the last bullish candle before the drop, which is this region, or you can actually use this one, right? You can use this one. You can use this particular one as your supply zone, right? Because of this drop, right? The last bullish candle before this is the bullish candle before the drop. So you can see that price came into it, then rushed back down, right? So now let's let's understand the validity of a supply zone, right? The validity of a supply zone, right? We already have established the fact that we want to see a sharp rally, a base, and a sharp drop, right? So a sharp rally, a base, and a sharp drop. Now, what makes the demand zone or a supply zone rather valid? What makes a supply zone valid, right? So the first thing you want to understand, like I said, is structure. Right? Price has been forming a series of lower lows, right? Price has been forming a series of lower lows, right? Price has been forming a series of lower lows. Now, if you look closely, you can see that we can see structure in place. The first criteria is structure. We can see that structure is in place. Now, what will make this particular region, because like I said, that a supply region or a demand region is where the move started from, right? Sorry, where the move started from, which is from this region, right? Where did this move, the move to the downside, where did it start from? It started, sorry, where did this move start from, right? This move started from this region, right? So from the leg that made a sharp drop. Now, until this low is being broken, I will not consider this as a supply zone, right? I will not consider this as a supply. I want to see, yes, I want to see a sharp drop, a sharp rally, and a sharp drop, and also a break of structure. Once I see a sharp rally, a sharp drop, and a break of structure, then this particular region is valid as a supply region. Hope you understand what I'm saying. A sharp drop, a sharp rally, a sharp drop, a break of structure, then this particular region is considered as a supply region. It's considered as a supply region. We can actually see an example like I explained here. Let's share this. If this is a typical example of what I just explained, a sharp rally, a base, break of structure, which is this particular region, a sharp rally, a base, a break of structure. Now you can see that price broke this structure. That is what made this particular supply zone to be valid. A break of structure, then a sharp drop, right? Then a sharp drop, right? So this is the end of the class. But if you have any question, you can reach me or get to me. Cheers and God bless.